Hello, Jim here. I make over 3,000 on a monthly basis with dividends. I've been an income investor going all the way back to the 80s. I really have enjoyed buying dividend paying stocks, especially of companies that increase those dividends at a nice clip. When you buy a company like that and those dividends are growing, anywhere from 6 to 8 to 10% on a yearly basis, it can have a huge compounding effect. Today, I'm going to talk about that. I'm going to share with you some of my favorite dividend paying stocks and how you too can do this. End up making around 3,000 on a monthly basis with five stocks. One is an ETF. So it's actually four stocks and one ETF that pay a good dividend and also increase the dividend. So stay tuned. I think it's going to be well worth your while. Okay, let's go ahead and jump right in. Now, I do believe the Fed's going to cut rates next month. My guess is a quarter point, but at some point, probably very soon after Trump replaces the Federal Reserve Chairman Powell, rates are going to come down majorly. Trump has talked about he wants to get them back to 1 to 2%. So that's going to have a dramatic impact on money markets and earning interest. And my guess is it's going to bring back into favor dividend paying stocks, the ability to earn anywhere from 2 to 4, and in some cases 5 or 6% with really good companies that pay dividends. So that's why I really wanted to talk about that. I do think the rate cut is going to have a major impact on that. It's also going to have a fairly good impact on small companies. I also expect to see like IWM, the Russell 2000, potentially also do really well with these rate cuts when they do come. But in the meantime, I do think people should start focusing again on dividend paying stocks, especially some have been really beaten down. I'm going to share with you five of my favorites, actually four are stocks. One is an ETF. I'll go into more detail about those at the end of the video. And I'll share with you what compounding looks like, the impact it could potentially have for you. So, when you pair that with selling options, it can be a huge amount of money. So if you're earning, I always tell people with selling covered calls, you can potentially double your dividend. So if you're earning 3 or 4% with dividends, you could potentially earn 6 to 8%. And it's not necessarily that difficult to do. It's not selling covered calls every month. It's kind of, I might do 2 or 3 covered calls during the year, and those 2 or 3 covered calls, typically I'm able to double the dividend. So if it's a company like Best Buy and their dividend is 5%, I'm able to make another 5%, which is meaning I'm picking up 10% on a yearly basis. Now, the beauty with dividends, I believe they're the closest thing to true passive income. They just show up in your account. There's nothing you really need to do other than owning the stock. And it's kind of a no-brainer. Covered calls, there's a little bit of work, but it's also fairly close to being passive income. So the ability to do this and, not do a lot of work, it's really a good avenue to go. It's a really good way to earn some really good income along the way. Plus, you still get that appreciation of the dividend paying stocks. Some of them are the best companies out there. So, and then the fact that a lot of these companies, so when I say look for companies that are dividend paying companies, it's really important to look at the growth rate. How fast are they growing those dividends? And then, also what is the payout ratio? So if they're growing a dividend, say 3 or 4% a year, you could potentially double those dividends maybe within 10 or 12 years. Some companies I've seen are growing them 6 to 8% on a yearly basis. I've even seen as high as 12%. So it can have a dramatic impact. Now, if you own those stocks for 10 years, like I said, you could potentially double your dividend from your original investment. If you own them for longer, like the example I'll share with you at the end of the video, where with my Coca-Cola stock, I've owned them almost 45, 50 years. They were given to me as a teenager, and I've kept most of them. I have sold some along the way, but I still have a majority of them. I'll show or share with you what that compounding looks like and how it's kind of crazy when you see it. I'm also going to share with you what it looks like to set up 4 or 5 companies now, and then over the next 10 years, set them up so that you could potentially make about the same amount, like 3,000 on a monthly basis. And I did the analysis for this using ChatGPT and Gemini. Now, with the latest release of ChatGPT, I found some issues. It gives you weird answers at times. You really have to almost do your own calculations. So I did some of it in ChatGPT, and then I also tried Gemini, and I found Gemini, the responses or the analysis was more accurate. So I believe the latest release of ChatGPT might have had an impact, because I've seen that a little bit with other YouTube channels and other people talking about it, and I literally have witnessed it with getting ready for this video. So we're going to look at that next, but I'll share with you a little bit about ChatGPT and Gemini, and I might even show you how they compare. So stay tuned. I think it's going to be, again, well worth your while. Okay, now if you watched my channel before, you'll know that my grandfather worked for Coca-Cola, and when I believe I was 17, 18, I might have been as young as 16. I believe it was 1983. My grandfather did give me 100 shares of Coca-Cola. At the time, it was $38 per share. Now, I got these details from Gemini, and it did a really nice job with it. So I was given the shares in 83. They were $38 a share, so it was originally a $3,800 investment. And then at the end of 83, the annual dividend was $268 per share, giving you $268 in total for that year for dividends. Now, the magic of stock splits, this is something else that can have a big impact. Coke used to split a lot more. Believe they will split again if they get into the mid to high 70s. They typically will split at that level, and usually just a 2-for-1 stock split. But you'll see here back in 86, there was a 3-for-1 stock split, and that turned 100 shares into 300. And then in 1990, a 2-for-1. So the 300 shares became 600. 92, another 2-for-1 split. The 600 became 1,200. And in 96, the 2-for-1 stock split resulted in 2,400 shares. And then finally in 2012, I believe it's the last split, another 2-for-1 stock split, and it turned 2,400 shares into 4,800. Now, I believe I have about 4,400 left. I have sold some. I've used it to pay off debt and for different reasons. I'm also using it for building my barn dough. I'm looking to sell probably 300 shares within the next couple of months to also keep to cash flow as much of that as possible. I'm trying to limit how much debt I create with that. So the current stock value, if you look at it for 4,800 shares at $68.93, which that was the price of Coke yesterday. I don't know what it is today. That's $330,864. Now, the current dividend of Coca-Cola has increased its dividend for over 60 years. So every year, like clockwork, usually February or March, they've increased. During the board meeting, they've typically increased the dividend anywhere from 2 to 8%. I believe last year they increased it by like 3 or 4%. And again, they've done that for 60 years. So they are a dividend aristocrat. So the current annual dividend is $2.04 per share. This means my yearly dividend income for these 4,800 shares is $9,792. So it's pretty significant. You can see the compounding has had a huge impact. And in the total return, the annual dividend income has grown from 268 to 9,792, and an increase of over 36 times. So, and that's just the dividend. So many times people talk about compounding related to, just investments in general, but you can also look at it in the sense of how these companies, these really good companies, will grow their dividends, and you'll get some amazing compounding. So every year, you get, another 3 or 4% increase. It's pretty substantial, can have a pretty big impact. And then the total value of your investment, including dividends and stock splits, has grown exponentially, demonstrating the power of long-term investing in investment. So it's just a real world example. That's what happened to me with those 100 shares. Is the 100 shares all he gave me? No, he did provide more. And I plan to provide some to my son over the years too. So if you're a grandparent and you have the opportunity to do this for one of your grandchildren, I encourage you to do it. Now, if I used to also compare this to Home Depot has even a more radical impact because Home Depot, I believe, grew a lot quicker. So you can play with different companies. So next, let's jump into the next section. So I did this part with ChatGPT. So step 0, build your income machine over 20 years. So this is just an example. So the goal is to accumulate 234,000. The assumption is 8.45 average annual return. So this is kind of a setup if you're looking and you want to accumulate dividend paying companies. This is similar to what I did. So you can invest 377 a month. Over 20 years, outcome is 234,000, or you could do 43.99 on a yearly basis, again 20 years, and you come out with that same amount. And the reason I'm saying let's start with the 234 is over a 10-year period to reach that 3,000 a month in dividends and covered calls. This is a great way to do it. So it enables you to, combine 1,500 in dividends and then also make 1,500 selling covered calls on a monthly basis on these stocks. Now the 5 stocks that I really like, and the only one I don't currently own is T. Rowe Price, but I'm looking to pick it up. I've been wanting to make a trade on it. I actually don't own any XLE, but I do sell a lot of cash secured puts or vertical put credit spreads on it. And I do want to own some, but I've been very successful with selling vertical put credit spreads on it. I've got one currently and it's never been assigned to me, but I may take more risk and allow at least a couple hundred shares to get assigned to me because I think it's going to do really well. If you're not familiar with XLE, it's an ETF that's related to the oil and gas industry. It's got the big boys in it like ExxonMobil, ConocoPhillips, Chevron, and so on and so on. I think it's got like 25 different companies. T. Rowe Price is a financial company. It pays a good dividend. I believe its dividend is also right around 5%. XLE is like 3.7%, I believe is their dividend. Con Edison, another utility, they pay a pretty good dividend too. And all of these companies and ETFs have been growing the dividends over the years. Coca-Cola, again, the shares were given to me so long ago, but they continue to grow dividends and they continue to grow at a much slower pace. I mean, these are not growth companies. That's also the reason why it's a little bit easier to trade covered calls on them. One of the pieces in my filter checklist related to covered calls, it's if they pay a dividend, and all these companies have been fairly easy to sell covered calls on, meaning they don't typically shoot through the roof. It doesn't mean on occasion they may go up $5 or $10, have a spike, but overall they don't do like what Palantir does or NVIDIA or even AMD. And then the last one is Procter & Gamble, and I've owned Procter & Gamble probably for 10 or 15 years. And like Coca-Cola, it's done really well. It's grown its dividend really well. So you do that, you invest into those, and this is showing how many you invest. So you'd have 1,200 shares in XLE, 300 shares in T. Rowe Price, 300 shares in Con Edison, 500 shares in Coca-Cola, and Procter & Gamble 200 shares. And it also shows how many covered calls you could potentially do with each and what the value would be. Now, this again was provided by ChatGPT. I just did questions back and forth. And like I said, originally the numbers looked crazy, so I had to adjust it and provide it some additional information, and it finally got the numbers correct. So again, the total invested broken down this way, 233,919, all positions are ready to generate dividends, plus sell covered calls opportunistically. So meaning it's not every month. A lot of times I might do two trades a year or 4 trades a year. Very rarely do I do covered calls on a monthly basis, especially on these companies. They do have good open interest and volume, but they don't have the amazing premium that you see on the growth companies like the Nvidias, the Teslas, the Googles, the Amazons. So step 2, reinvest everything for 10 years. So you would reinvest all dividends plus the call income, and then the portfolio compounds at 8.45 annually based on average growth plus reinvestment. And then this is what happens to it over the years with the end result. It grows every year. In the end, it's worth 542,720, and it's paying 18,000 in dividends on a yearly basis. Plus, you're earning around 18,000 in covered call premium on a yearly basis, which of course the 36,000 equates to 3,000 on a monthly basis. So by year 10, you earn 3,000 on a monthly basis, and the portfolio still intact, income still compounding. So, and then I added a little piece here. And again, I did this all with ChatGPT. I could see how it's going to have an impact on a lot of the analysts. And Gemini can do the same thing, and Grok can probably do the same thing. So step 3, income strategy, dividends plus opportunistic covered calls. So income is not from monthly selling, your market timing and safety. That's what I talked about before. Goal is to roughly double your dividend income per year via covered calls and no risky rolling or over trading. Again, in my mind, the idea is in your retirement, you still want to trade, but you don't want to turn it into a job. Some months I don't sell a single call. Some months I sell 2 to 3. My aim is to match my dividend income safely and let the rest keep growing. Result, 18,000 a year in dividends and 18,000 a year in covered calls, just like I mentioned, or 3,000 month average, even if it comes in chunks. So again, that's something that's important. Even though I'm showing 3,000 a month, it could be 2,400 one month, 3,800 another month. And you see that with a lot of my premium that I earn selling options. My goal is 8,000, but my lowest month I think right now is 7,300, and I have my highest month I think might be 9,600 or 9,200 on a monthly, for one particular month, and then kind of all over in between that. So here's step 4, supercharge with 4% rule. So I was just playing around a little bit and I asked ChatGPT to add this in. So you continue collecting dividends, covered call cash. Again, you're earning 36,000 a year, and then start withdrawing 4% of portfolio annually for additional income. So this is real interesting. So it shows what the portfolio is worth. Here's the 36,000. Here's the 4%. So you start with 57. And each year the 4% withdrawal increases, and so does the yield related to dividends. So it suddenly gets beyond the 36,000 on a yearly basis or 3,000 on a monthly basis. So you can see it steadily increases. You could also manipulate this. You could start with a lower percentage initially and then increase the percentage later on, or vice versa. Or you could adjust the 4% rule every year depending on inflation and other factors or market conditions. So long story short, you just keep increasing it, and at the end you've got $1.2 million, $1.237 million. You're earning 49,000 with the 4% rule, and then another 80,000, and you're coming out with 129,759. Now these numbers are fairly accurate, but I could have kept on going here, and I could have made additional changes, and it'll produce the graphs, it'll produce tables and charts. It's really amazing what both ChatGPT, any of these AI tools, Gemini, ChatGPT, Grok, what they're able to do. So that's just what I wanted to share with you guys. The important thing now is look at companies like I talk about up here, or ETFs like XLE, T. Rowe Price, Con Edison, Coca-Cola, Procter and Gamble, maybe even IWM with these cutting rates. I think, like I said earlier, IWM is going to do well, I believe, especially for these small companies because, they use debt and they deal with the bank. So these rate cuts could have a profound impact on their ability to finance their operations. So let me know what you think. Has this been helpful? Are there any other dividend stocks I should add to this list? Now, if you're curious about my memberships and stuff, I share all of this with my memberships. I have a dividend section in my Discord. Every time I make a trade, I post it. I post it on Patreon. I post it on Discord. And I have different areas. And there's a lot of people sharing their trades, mentoring other people who may be a little bit new. So it might be worth your while. Take a look. I also don't, it's easy in and easy out, meaning you can join right away. It's, you don't have to go through someone, like a phone call before you get access. If you get into coaching, you talk to me, you don't talk to someone else. Literally, you could set up for coaching and have a meeting with me the next week. So just wanted to share that. And as always, thank you for taking the time to watch. And I hope you have a wonderful rest of your day.